Okay, so what do we have here? Day 4 of the first week and out of the money, yes, and here that is what I have explained often. Flat 200 EMA price is ranging around it. We are far away from the 2 deviation Bollinger Band. You entered into a call because you believe that this inverted bullish hammer would be a trend continuation, but not here. The important thing here is that you get this wick is showing selling pressure. The second top, yes, if you have a first top, then to do a trend continuation, this candle has to break through this area here. It has to create a higher high here. If it's not doing this, you have to expect at least a reversal or a double top. Yes, and that is what here will happening. Here will happening a double top, and then after this a downtrend, because we have what? Exactly a flat 200 EMA. That is what this is about, yes, and that is what you should understand. If you have a top, yes, and the next one is not reaching this top, yes, it's you have to need a confirmation to do a trend continuation. Don't do trend continuation because you think something, yes, because you will get trapped like this, yes. You have to understand this. And also this week here, you see, price got rejected from it. So, okay, the entry point was good. The only thing what you didn't understood is that that you are far away from the 2 deviation Bollinger Band, and that is tricky. Here you get consolidation area, yes, and often you will be trapped here. And it was a close out of the money, yes, because the rejection was not enough here from this support and resistance level. But the problem here, if you see a top and the next candle will not reach this top, stay away of a trend continuation. If you are far away from the 2 deviation Bollinger Band, stay away of a trend continuation if you are not sure what's happening, yes. And you have the 200 EMA which is flat. If it would be a steep one, you could have entered into a call and it would have most probably breaking through this area and it would have been in the money, okay. So okay, week 1, day 4, trade 1 out of the money based on this kind of uptrend, ranging, double top, yes, and then the breakout of this double top through the neckline, and then happens that what often happens, that price retrace back to this neckline here. So if you have a distance, yes, such a distance between those two, you have to be first of all confirming that price will not do this retracement and doing a pullback again immediately, yes, because we are here in an uptrend, we have here ranging market, yes, and so you have to be careful. Let me see what you have written here. Major trend is up, yes, it was up. Here we had an uptrend, yes, here we got in ranging. So a major trend is down, yes, major trend after this was going down, yes, but in this downtrend there should be always retracements, and I have explained this again. Let me do this again because it's important that you understand this. That will happen often, and this can apply to any kind of support and resistance level. So here we have the neckline. Yes, this is the neckline. So here, this is where the neckline is. It got broken by a huge candle. Often price, if the distance, it's the same valid for the engulfing candle. You see here, engulfing candle, and the price will touch this level again. That means engulfing candle and price gonna touch this level and then it goes down. And the same is valid for the double top for the chart, for all chart patterns. Price retrace back to this level, support and resistance level, neckline, whatever, and then it does the pullback. So if you have a huge candle, you need a confirmation that the price will continue to going down. Else, you wait till you get the next candle to see if there will be a retracement which is going to touch the neckline. This is how you increase the win ratio at this kind of chart pattern, okay? That is the same thing like an engulfing candle, next candle is a bullish candle, and after this it continues to going down because price tries often to get back to the support and resistance level. That's what happens here. It got back to this level and then after this it continues to going down. So previous candle crosses EMA and round number, yes, okay. But this was a fake breakout. Rejection from EMA and round number and continuation trade, yes. But this candle was too big to do a continuation trade, yes, because it shows here already on the lower shadow that it was coming up some buying pressure, yes, and you didn't care about this. Yes, you got a rejection here, but from what EMA, from what kind of EMA or what kind of round number did you got the rejection? You don't know, yes, because there are so many. So you have to be much more careful, yes, more aware about this. Okay, I think that was clear. For the next time, you know that price often retraces back to the support and resistance level, and so you don't enter immediately. You have to wait to get understanding what will happen, yes, okay. Okay, week 1, day 1, trade 1, what's gone wrong here? Yes, you believed into a trend continuation, maybe because we got here price action on the left, but this candle here is showing huge buying pressure. Here are the buyers waiting all the way. Yes, here, or the complete area. Then we got an uptrend. Yes, you entered into a put. Important here is, if you are doing a put, you should try to enter above the support and resistance levels, yes, not below. That was the worst possible entry point, yes. I don't know why it happened. Maybe because of lag, yes, maybe also because you saw this nice of movement and you was expecting that price would continue to going down because you have seen this here, yes, but that was a trap. You have seen here uptrend, retracement, and then price will continue to going up. That is what this is about, because we have the alignment 20, 50, the 100 will soon crossing the 200, and then you have the 100 and the 20. Yes, and here yes, what can I say? You entered too early. Yes, maybe you have seen this kind of formation which looks like a double top, and you believed into a trend continuation, yes, after this wick here, but this wick was showing you buying pressure, yes, that there will happen now a fake breakout of the 50 EMA, yes, yeah, okay, that was already. I hope you have understood this, yes, that you have to try to get a better entry point at least. Yes, if you do a put, you should try to enter above this closing price. In the consolidation area, you should try to enter here and here. Here you do puts, and here you do calls, yes, and you have done a put below those ones. That was not good, yes, and here, if you would have entered above the closing price of the previous candle, this dragonfly doji, this gravestone doji, you would have got this in the money. I hope so. You will fix this the next time. Okay, good. Okay, week 1, day 3, trade 1, out of the money, yes, and okay, it was a trend continuation trade that would have been in the money if you would have entered above the closing price of the previous candle. That was a trade against a strong support level, the 61.8 Fibonacci level. The application of the Fibonacci level was not bad. But yes, let me see what you have written here. Ranging market, last candle crossed the 160. Yes, this is not crossing here. Yes, that is not crossing. This is touching. There is similar pattern like double top 20 EMA. Yes, here, this one here. Yes, okay. It was a pullback of this double top here, yes, or head and shoulders pattern, and then the trend continuation, and then we got here into a retracement again, because we have here ranging market, and I have told this, in ranging market price is often, yes, there and tries to retrace at key levels, yes, and the 20 EMA is a key level. Don't do trades, and that is what I can recommend to you. Don't do trades in between of the 20 SMA and the 20 EMA, because you get trapped by the movement of the candle, because price didn't know where to go, because it's between the 20 EMA and 20 SMA, and then you get out of the money. Was a put for me. I don't understand why I lost. You lost because it was exactly on this consolidation area of the 20 EMA and 20 SMA in confluence with the 61.8 Fibonacci level. You got trapped by the movement of this candle because of this trading position, yes? So stay away in ranging market from this kind of areas where the price, where the SMA and the EMA is crossing, and where price is in between of them, okay? That is why you got this out the money. So. Okay, so week 1, day 4, trade 1, yes, let me see what you have done here. Yes, was it a call? I think you have done a call here. You expected that price would go up. So what happened here? My timing was not correct. I never saw the timing, which was 1 minute when I entered. For 30 seconds, price went up from support level and then it came back. Yes, you entered here into a call. First of all, to enter into a call, enter below the previous candle closing price. Here, this level, that should be at the minimum the level where you should enter to do a call. Don't enter into the upward movement. So that's the first one. The second one, okay, that with the timing can happen, yes, but anyway, it would have been out of the money anyway, yes. So take care about the timing, and second, don't enter too early, too hesitated. Be patient. Watch for the time. Watch for the trading setup. You have all the time of the day. Yes, you have one trade to do only. So try to do the best trade. That was not good. Yes, and you have seen what it was. Yes, I have done a video about the purchase time and the expiration time. Here you see this how it works. But the problem here was not the purchase time and the expiration time. Here the problem was that you entered into a trend continuation, yes, without any kind of evidence and not below the closing price of the previous candle. We have here ranging market, yes, and in ranging market, what I have told you always, and all the other students and all those who are watching my videos, on ranging market you have to trade the edges of the Bollinger Band, and you are doing here continuation because you believed into an uptrend. And that was not a strong uptrend. Okay, I think that was clear. Okay, so here week 1, day 2, yes, and out of the money, what have you written here? Yes, exhaustion candle, yes, it's also not an only exhaustion candle, it's also Marubozu candlestick, and that is what happens often. Candle is, I presume, but went wrong. Yes, why did it went wrong? First of all, because we got here all the way ranging market, nice reversals here, yes, at the edges of the Bollinger Band and also in between, yes, and then price started to go into a trend. Yes, here you see they got into a trend. After this candle, price started to go in a breakout. This candle showed you with the breakout of this support and resistance level, which you have drawn here, based on this kind of fake breakout. Yes, this was a fake breakout here. Here is this. After this break, you should have understood that this will be a trend continuation and going up further. You entered here because you accepted some kind of Marubozu reversal trade, yes, but in this case it was wrong because price broke this support and resistance level. This one here, you see resistance, support, yes, breakthrough, then this will act again as support level, yes, and every trade would have been good if you would have continuing up, yes, because after such kind of long ranging, price should get in some kind of trend, yes, and that is what happened here. Yes, you see here uptrend, yes, to 200, 100, 50, 20, and then the crossing also. That means that here the trend started. Okay, I think that was clear. Yes, yes, the BB flat, yes, it's okay, yes, but you see it broke this flat BB, yes, it broke this. Yes, here, this candle broke this with determination. More than this is not visible, yes, it is the most visible part. Also, okay, I think that was it. Maybe you have seen here the RSI, yes, and have thought, okay, we are in overbought area, now we are doing a put. Stop using this kind of RSI because that is nothing telling you else than this what is going up here above the Bollinger Band, outside the Bollinger Band. You don't need the RSI because the RSI is only confusing you, because if price is in overbought area, it will stay in overbought area, and it doesn't matter how long. It can be really a lot of candles, yes. Okay, I think that was clear. On day 5, first trade out of the money. What happened here? Out of the money by hair. Yes, let me see what you have explained here. Due to this buying pressure, yes, it's a selling pressure in reality. It's not buying pressure because it got a rejection here from this level. So this showing selling pressure, yes. I thought price will move up again after engulfing candle. Price also reacted at SNR. Okay, that is a ranging market, so it looks all the most of the time that it would react to any kind of SNR, because here are always SNRs. 20 EMA pull price towards itself, very bad trade, no doubt. Okay, the thing is, if you would have entered here above the closing price of the previous candle, it would have been most probably in the money. This engulfing candle was not bad at all. Yes, so you could have done here at least a put option, like I have explained in my ebook about the engulfing candles. Then it would have been most probably in the money. Yes, but you have to understand, if you have such kind of wick, it's showing at the first moment buying pressure, like you told, but in the second, yes, that there is coming up some kind of selling pressure next, yes, and that is what this is about, because here we already got the information that the trend is almost over, that here are sellers waiting and giving selling pressure, yes, and the market was here almost ranging, and that was the reason why this candle retraced back, because I have explained this often, in ranging market price retrace back at key level, yes, and here middle Bollinger Band is a key level, and you should try to stay out of the trade in between of the 20 EMA and 20 SMA, because here price is doing this one here, yes, up down up down up down up down up down, and 50% chance what will happen, yes, because you don't know what will happen, 50% chance. Okay, I think you have understood this. Okay, week 1, day 5, trade 1 in the money, trend continuation, yes. Let me see what you have done here. Yes, you applied there the 100 level. It could have been a little bit more, yes, more down here. Let me see. Here, the 100 level should have been applied to this wick. Yes, this wick here, or this wick, because it is much more reliable. Okay, it was clearly, but it would be better. So you have applied to see, okay, it's okay. So you have done a trend continuation, yes. After this mineral downtrend in this kind of van here, yes, where the EMAs are getting into a downtrend and are crossing the 200 EMA. Let me see what you have written here. Ranging market, Bollinger squeeze, breakout. Yes, here, ranging market, exactly. Then the Bollinger breakout, expansion of BB, exactly. 161 Fibonacci level broken, yes. It doesn't matter where it got broken. Here we have the support and resistance level. Here support, resistance, yes, and again resistance. And that was where you entered. 20 looking down, yes, exactly. Yes, this is a maximum on the downtrend, the peak on the downtrend, because they are maximum outside, yes, and price between 2 and 3 deviation. Yes, really good, yes, exactly. Really good explanation here, really good trade, nice job. The whole week, really good job.